So, two things there, right? It's what's the Fed going to do next week, and then the housing market reaction. 30-year fix has bounced between 6.5 and 6.75 this last week. I tweeted out a couple times on those 2 days out of the 5 days this week where it bounced down to 6.5. We'll see. Maybe it comes in at 6.5 today. We're
Mm-hmm.
recording before the first read on the 30-year fix comes out. But anytime it gets to 6.5 when it was just at 7, I'd be locking some people in for weekend shopping. Okay. If you're not having that conversation, hey, I know we're going out this weekend and I see our list is 8 homes right now. If you're thinking that one of these homes might be the one that we're going to go and make an offer, let's try to lock in now. Let's talk to the lender about locking in before we go out here this weekend so that you're at 6.5, because you and I before the show, like, we've never seen rates change this much. It could be 7.1 on Monday.
Mm-hmm.
And so I want to get locked in if I'm a buyer. And then to your point, if I'm looking to put money anywhere in 2023, and this is going to be good for housing, I mean, geez, bonds, right?
Oh,
I mean, look what's happened with the banks putting money into bonds. You don't want to just leave your cash in the bank. That seems like a risk right now. I mean, where do you invest money? You saw what's going on with SVB. You know how risky it is investing into somebody else's business. I'd caution anybody investing into a business that you don't have control in. If you've got your own business right now, if you're a real estate professional, which you likely are listening to this pod, hit the thumbs up, by the way, if you are, then you should be doubling down on your business if you know it inside and out and you can make a margin on it. But other than that, real estate is where you want to put your money because it is something that is indestructible to technology and getting a return on your money. And Tom, I shared with
mm-hmm.
you that Fortune article
Yep.
where let me pull that up. I don't know if you can pull it up or anybody else can behind the paywall, but we'll link it down below if you don't have the paywall there. I'll break it down for everybody. Homeowners who held on to a 3% mortgage rate are becoming accidental landlords. Okay, so inflation is obviously real. You and I are both in the camp. Jerome Powell, stop. You
Please.
know,
We're begging you.
stop with the rate here. We know it's real, but you are going to destroy the economy just like we tried to do in 2020 when we stopped the economy. So inflation's real, but when you have an asset where debt is fixed, and especially if it's fixed at 3%, like all of these mortgages out there, and we're running at inflation above 3%, you win, meaning the person holding the 3% mortgage. It's like printing money. And the 30-year fixed rate debt, that's the magic in this. And so when people are like, okay, well, I've got 2 homes and they're both at 3% or less, I really don't need both of them. This is what they're talking about, becoming an accidental landlord. And this is what's holding up inventory because they're just going to keep it. So until we actually get that 30-year fix closer to 4.5, where it makes sense to like, hey, let me get that on the market and maybe move that money into something else. Because, when we're talking 1.5%, if the 30-year fix is at 4.5 or 5, I can make that decision. But when it's closer to 7, I have a hard time getting out of my 3% asset. I'm killing it. Like Zuber here. Who is this Zuber guy? Quoted Michael Zuber, the offer of one rental at a time and former tech worker turned real estate investor, told Fortune this 30-year fixed rate at 3% is the best asset to have in America today. And that's why people aren't selling them.
Well, and the fact that you bring that up, I mean, I've had some explorations with some CEOs at high-level mortgage companies about this. This is the jam up. Is there a portable option? Are there things you can do, which you can do in Canada? There's too many moving parts. It's just like the FHA assumable loans. Everyone thinks this is a great idea, but consumers can't understand how you can sell that rate with the loan, and a lot of people can't communicate it. And what ends up happening is you've got folks that are locked in. We've already seen the length of home ownership rise dramatically even before the pandemic. It used to be about 7 years. Now it's north of 11. So you're almost
I know.
doubling that, right? It's almost up, not doubling, it's almost up 50%, right? So because of that, and with this rate hike environment that we're in, it's just not making sense. And our friends at Keeping Current Matters, they put a great chart there. I just sent this to Bobby to put up on the taping here.
Yeah, put this up.
That when you hit 6.5, the demand picks up, and we're in a I think you got booted out of the group text, but we're in a group text with a lot of team leaders across the country. And when this SVB news hit, Byron didn't engage. He got voted off the island.
Don't put me on a 50-person group
The max is
text
20. You can't.
message
See, you're already more than
when
doubling the actual numbers here. That's not the point. The point is
if people
this.
want to wish happy birthday every other day in a group text message, yes, I will gladly opt out of the text message.
I don't even tell people when my birthday is because I don't care. So I think that's the move for guys like me and you. With that in
Nobody
mind,
likes me enough to wish me
I
happy
would wish
birthday,
you a
Ken.
happy birthday. I'd probably send you a video too if I knew when it was, but I also don't care. So there's
But
that.
I will not
Yeah,
disclose.
see, we're in the same boat. This is why we're focused on this stuff here and helping people. So if you share your
And see, this is
birthday,
why we need Lisa, because she would say right now, "Shut up, you two bitches," and get back to the subject at hand.
yes, if you share your birthday, let us know in the comments. I'm curious about that. So anyway, this chart from Keeping Current Matters. It's when rates hit 6.5, the demand almost shifts instantly from weak to good, right? And we'll put this chart up there, and it showed what happened so far this year. And if you look at how the markets reacted, we saw that pump fake in January because rates were lower.
Yeah.
Then when they went up north of 6.5 at the beginning of February, I think that was a harder time. Or it was really mid-February, like the 10th or so was when they came in about above 6.5, and it's weakened buyer demand. And now we're starting to see it come back. The group text that we're in, or that I'm in, it's team leaders all across the country. There's such a demand for single family homes that these banking failures aren't going to have an impact on it. That's what a lot of predictions are. They're worried about commercial real estate, smaller regional banks. The demand is still there. So if you get people at an affordable rate and that deal becomes really juicy for that person with a 3% rate, or maybe they have a low loan balance, so it doesn't really matter, they're cashing out anyway, that's where things get exciting. The challenge is a lot of homeowners, we have more equity than ever, but if your LTV is a little higher and you're going to go buy something else, you're trading for a higher monthly payment. So I don't blame the accidental landlord. I think it's a smart business decision, and we can't control the rates. That's
Yeah.
why the Fed is kind of the issue here. And we go back to my source. There really is a little bit of a policy blunder that happened, and they got to slow down.